Welcome to The Explainer. Today we're unpacking a really fascinating contradiction in the tech world. So, Cisco Systems just posted the absolute strongest financial results in its entire history. We're talking a record-breaking $17.3 billion quarter. They are clearly riding this massive, multi-year AI supercycle. But, and here's the crazy part, almost immediately after this triumphant announcement, their stock actually pulled back. Why? What is actually happening beneath the surface of these massive numbers? Let's figure this out. Okay, let's dive into this. To unpack this whole paradox, here's our agenda. First, we'll look at the record growth and that puzzling pullback. Second, the AI networking supercycle itself. Third, some critical cyber challenges. Fourth, how they're securing the agentic workforce. And finally, the future outlook.
Section 1, Record Growth and the Puzzling Pullback. So anchoring ourselves on August 12, 2026, Cisco's Q4 revenue hit $17.3 billion. That is a massive 18% jump year over year, and it completely blew past Wall Street's $16.84 billion expectation. I mean, GAAP net income up 51% to $3.9 billion. Earnings per share shot up 52%. Their CFO, Mark Patterson, even pointed out that Cisco actually achieved its highest productivity metrics in 30 years. And this wasn't just isolated to one lucky product or region either. Product orders grew a staggering 44% in the Americas, alongside a 25% bump in EMEA. This was broad, undeniable, global growth. To put a human voice to these raw financials, CEO Chuck Robbins essentially echoed that same excitement. He emphasized the accelerated pace of innovation and, of course, the excellent execution by their teams. And the full-year metrics absolutely back him up. Fiscal 2026 full-year revenue reached $63.3 billion, which is up 12% year over year. By pretty much all traditional metrics, they knocked it completely out of the park.
But here is the paradox we're looking at. You have this record-breaking financial performance meeting a 4% stock pullback after hours. Now, context is literally everything here. Cisco's stock had already advanced over 60% in 2026, sitting right around $120 prior to this earnings report. But still, right? A 4% drop on record, blowout earnings, that introduces our central mystery. What expectations were baked into that price?
Section 2, the AI networking supercycle.
To really understand the market expectations baked into that stock price, we have to look at the underlying engine driving these record financials, and that is a multi-year demand wave from hyperscalers building out AI data centers. Just think about the sheer scale here. $9.3 billion. That is the total AI infrastructure orders Cisco secured for the fiscal year 2026. And $4 billion of that came in Q4 alone. To put that into perspective, that total represents roughly 4.5 times the prior year's total. The acceleration is just staggering.
Now, what's really interesting about this is how quickly Cisco shattered its own expectations. Back in May 2026, they had already upgraded their AI order forecast from $5 billion up to $9 billion. But the actual orders blew past even that upgraded forecast, hitting that $9.3 billion mark. They are literally outperforming their own most optimistic projections. However, we do have to explain a really important nuance here. Orders do not equal immediate revenue. While AI was only about 6% of Cisco's total fiscal 2026 revenue, they're forecasting recognized AI infrastructure revenue to jump to $7.5 billion in fiscal 2027. That's when those massive hyperscaler orders actually convert into recognized sales on the books. And you might be wondering, why is demand skyrocketing so incredibly fast? Well, we're moving from current chatbot network traffic to future agentic AI workloads. Cisco believes these autonomous AI agents could lead to a more than 450% increase in network traffic compared to today. That's a tidal wave of data. And that is exactly why their data center switching orders increased over 25%, and enterprise Nexus switch AI deployments jumped over 85% sequentially. The physical network literally has to expand just to carry the weight of these new AI agents. To actually handle this, Cisco has a massive hardware edge over merchant silicon. The standard off-the-shelf chips used by a lot of their competitors. Their custom Silicon One G300 chip delivers 102.4 terabits per second of switching capacity. It's purpose-built to power these gigawatt-scale AI clusters. Pair that custom silicon with their Akasha Optics business, which, by the way, took in $1 billion in orders in Q3 alone, and you can really see how Cisco is engineering the physical backbone of the AI revolution.
Section 3. Critical Cybersecurity Challenges.
Now, we need to pivot objectively to the sobering reality that accompanies all this euphoria of the AI supercycle, and that's a highly complex, highly vulnerable security landscape.
Because let's be real, the larger the network, the larger the attack surface. Take a look at these highly technical flaws released just in the August 2026 patch cycle. We're looking at 3 critical vulnerabilities in Cisco Catalyst SD-WAN. There's a command injection vulnerability in their iOS XE network operating system, publicly available exploit code for the integrated management controller, plus denial of service conditions in Secure Endpoint and ClamAV. This just highlights the immense, undeniable challenge of securing massive network operating systems at a truly global scale.
Just to ground us in how undeniably critical these threats are, consider this number, 9.9. That is the CVSS severity score for those Catalyst SD-WAN vulnerabilities, out of a maximum of 10. So yeah, these aren't just theoretical bugs. They are apex threats that require absolute immediate remediation to keep enterprise networks safe.
Section 4. Securing the Agentic Workforce. So how exactly is Cisco responding to these threats? Well, they are deploying capital incredibly fast, through M&A to secure a completely new paradigm, the non-human actor. On June 29, 2026, they acquired Astrix Security for an estimated $400 million, specifically to lock down non-human identities like AI agents, service accounts, and API keys. Just a month later, on July 31, they acquired WideField Security to build agentic security operations center capabilities directly into Splunk. They are basically buying the exact architecture needed to monitor autonomous agents roaming on the network.
And I absolutely love this part. They aren't just selling this technology, they're eating their own dog food. Starting in July 2026, Cisco actually deployed personalized AI agents to its entire 90,000-person workforce. They are running one of the largest enterprise-wide AI deployments in corporate history. It's a massive, real-world test for the very security tech they're building for their customers. And this brilliantly illustrates why this security pivot matters so much to enterprise leaders right now. According to the Cisco AI Readiness Index 2026, only 24% of organizations can control AI agent actions with proper guardrails. A massive 76% cannot effectively control them. Think about that. When 65% of CEOs are publicly fearing that they're underinvesting in AI, but over 3/4 of them can't even secure the agents they already have, well, that is the exact gap between ambition and readiness that Cisco is positioning itself to fill.
Section 5. Future Outlook and Expectations.
Zooming back out to the big macroeconomic view, what does all of this mean moving forward? The projections are incredibly strong. Q1 fiscal 2027 revenue is projected between $18.0 and $18.2 billion, which is well above analyst estimates. For the full year, they're targeting $72.2 to $73.4 billion. These numbers are being heavily driven by deep enterprise relationships and these multi-year campus refresh cycles, as legacy infrastructure is finally getting ripped out to make way for AI-ready platforms. So the crucial point is this. Despite the record revenue and the absolutely massive AI orders, significant threats to Cisco's dominance remain. There's intense margin pressure for sure. There's fierce, relentless competition from rivals like Arista Networks and Hewlett-Packard Enterprise. And perhaps most difficult of all, there are just sky-high market expectations after a 60% stock run-up heading into earnings.
Which brings us right back to our initial paradox and leaves us with one final provocative question. Will Cisco's custom hardware moat and their rapid security pivots be enough to satisfy Wall Street's sky-high expectations for the AI supercycle? The networking boom is definitively here, but the bar for success has literally never been higher. Thank you so much for joining me on this explainer. If you found this breakdown helpful and want to stay ahead of the curve, make sure to subscribe for more in-depth tech analysis, and I'll catch you in the next one.